Okay, this is Pat, and here's the spreadsheet that I'm working with. It's called a P&L schedule, and here's kind of the main sheet which drives everything from some of these other sheets that are run along the bottom here. So you'll see raw materials, facilities, labor, legal, accounting, fees and insurance, debt and obligations, software, tooling, capital equipment, marketing, travel, taxes. So anyhow, let's kind of go back here and we'll take a look at this one main graph here, which kind of looks at where we're going to need cash coming into the project and then the upside, where that can go. So we kind of take a look at different things. COGS are your cost of goods sold. EBITDA is earnings before tax and interest, depreciation, and amortization. So if you have equipment that is getting amortized or tooling that was built, a lot of times accountants like to spread that out over the course of a year or two or three. Sometimes there's licensing fees that you've got to pay to put a brand on there. The venture is NewCo. So anyhow, this is kind of where we're going. We want to take a look at state, federal taxes, county taxes, FICA for employees and all that. So these get really elaborate. This is a pretty basic one. But I'm going to kind of go into the beginning of the year for 2015, take a look at the months from January to December, and kind of look at the cash flow. So we've got income that we can kind of bring in from different sales of a particular product. We can look at the raw materials. They refer to it as cost of goods, or when you enter it into a QuickBooks program, you're kitting the project, so you're looking at all the little things that have to get ordered to make a product happen, including packaging, point of sales displays, plastics, circuit boards, electronics. Could be a lot of different things. The facilities, they tend to have some general overhead that needs to be addressed, and we've got labor, we've got legal, we've got accounting, we've got insurance, we've got debt that might be associated with it, so you need to include some of the payments on that. Software, web development seems to be a big part of developing a process or a product in this day and age, so I've got a line included here. Tooling and amortization, if there's hard goods and we're have to build steel, these things need to be kind of addressed where we're going to be spending money on that. A lot of guys, when they're building tooling, they're going to require 50% down. Capital equipments like machinery, you have to bring in presses, or it could be tables or computers, so those have to get addressed. Marketing, so marketing is always a big part of selling a product. Then I always include travel, lodging, things like that. So we move into the income statement, which is probably where a lot of this gets driven. We have a bunch of different sales here, and if you look over here on the right of the spreadsheet, you can change these numbers and it'll update the front spreadsheet. And it gets pretty elaborate if you're really trying to look at all the figures in an accounting package like QuickBooks, or NetSuite could do a better job of this, but this is kind of giving you some ballpark figures, and people like to play around with these numbers. So here's some pre-sales that I was looking at: 50 units in March, 500 in April, 1,000 in May, and then we had web sales kind of turning on. The website would be done and up and running in June, July, August. And distributor sales are usually half the price of what you would sell on the website, so distributors need to mark that up to cover their costs. And then we have local sales, where we're kind of doing guerrilla sales, grassroots sales at the local market. So I kind of went in, and then this all gets itemized here. So if you click on like this number here, you'll see this sum, and it kind of adds up everybody in these columns. So I'm adding up columns, and then these columns will go and they will be used to drive the numbers on the other spreadsheet. So if you look down in here, we've actually got some giveaways. So we're trying to promote the product at trade shows, and anyhow, we have some numbers there. We've got some high sales here of $125 a unit, which is the retail price, the MSRP price. And then we have the distributor sales, which is going to be about half that, so I got it at $62. Local sales would be less than that. because we've got local sales commissions that need to be taken out of the income. So this is all income, and I kind of went in and just averaged them out. So there's a lot of different ways to do this, but here's the average price, $79. And so if we go in and we go over to our income, these numbers are all being updated by this other sheet here. So you don't change anything in this P&L schedule right here. You're going to be changing it in these back sheets here. So if you need to change like a quantity, we could change this to, for some reason we get a big sale, let's say 500,000, and we update it all. You see all the numbers updating here, and then you go back in here and you can see it all updating here, and then you see this big spike right here in June. So you can kind of watch this graph update things, and we can make a lot of different graphs, but this is kind of a profit and loss, earnings before taxation. So anyhow, we'll back out of that, and we go into raw materials. So we're looking at different things. I've got aluminum, plastics, ceramics, packaging, a bunch of different things, electronics, and anyhow, these can all get edited for your own clarity, and then you can kind of go in and you can adjust the price. This is your raw material price over here, and then it'll update all of these numbers here based on the quantity that's being sold. So this total units sold right here, which I can highlight here, is an adding up all of these, and then it kind of helps you understand how much raw materials you're going to need along the way to do all this. So these numbers are negative, so accountants like to put parentheses around these things in spreadsheets, and they actually subtract numbers from any positive numbers coming in. And facilities are pretty easy, so you've got buildings, phones, power, electric, air compressors, whatever. You can change this around and kind of adjust these numbers as you need them, and then they'll just all update down here. So you don't want to change this total here, but you're going to be changing these numbers throughout the year. Your labor, right here, we've got different people that are going to be doing different parts of it. They're going to manage it. We've got a lot of electronics in this project. Engineering, marketing, software, product management, labor, so forth. And then this all gets updated. So if you need to add something new, you might go and right click and you say insert, and then you'll put in a new one here, and everybody will update down here. So if you have to add more people in here or a line item, you just kind of right click on the spreadsheet and you say insert row, and it updates that. So we'll just back out of this a little bit here. Legal, you've always got legal stuff, contracts. People, if they're trading stock, they deal in a term called Sarbanes-Oxley, which is kind of keeping it all compliant with the Securities and Exchange. So if you're trying to sell your company, you always want to try to keep documents and things like this updated at the lawyer's office. I've got a line item here for patents. So we'll kind of start doing some heavy-duty patents in this time frame, and then it'll start tapering out in this time frame. So these numbers can kind of get juggled around here, and then again, you don't want to change this number. It's just updating everything. So then we get into accounting. We've got some accounting services, so we want to do quarterly filings in each quarter. So you're going to kind of see a high spike with our accounting fees. So they're going to be doing a lot of different things. They're going to take numbers in, and they're going to be crunching it for year-end reports and quarterly filings for different people. So fees and insurance, we've got loans that we've taken out, like owner contributions. A lot of times they'll put in loans, or you can have a distributor that might loan you some money on some things, but these are kind of bank fees, credit card fees, different things that come into play. Again, it all adds up, and it goes back to this front sheet here. So everything's updating here. You don't want to touch this, but you want to update these sets here. We get into software. I've got all kinds of different software that I'm purchasing to run the company. We've got search engine optimization, Google AdWords, and I'm going to be spending some money on AdWords. And this kind of all adds up as a negative number because it's an expense. Here's some molds that we're building and all kinds of fixtures and stuff, and they get kind of expensive, and you can kind of start spending a lot of money up front before you start seeing revenue. And so this is kind of a negative item here. Capital equipment. We've got some CNC equipment we're buying for the project. We've got a machine called a Swiss screw machine. We've got all kinds of things, and you can just kind of add up all that capital equipment. A lot of times it gets amortized over a period of time, but they're still expenses at the end of the day, and they need to be budgeted in. marketing, so we can kind of go in and look at marketing. Right here I'm just changing everything by how much we're selling, and then I'm using 10% of the total budget as my marketing budget. And so these are the expenses that we're going to see going into the year. So we really start using a lot of marketing dollars. I didn't really specify where we're going to spend the money, but we just know that 10% is going to change this. So I could change this to 20%, and you'll see everything update. If you see these pound symbols, it means that the spreadsheet can't read all of the digits and the decimal points there, so you just kind of roll it out there a little bit and that'll update. So that's 2000%. So let's go back to 0.1, and that gets us back to where we are. People have different marketing budgets. Travel and expenses, hotels and all that stuff's always needs to be addressed, and then taxes. So yeah, this is an overview, and it's pretty cool. So this will get you in the ballpark on what your costs are if you play with this, and you can kind of manipulate the numbers on the other spreadsheets, and these things update. So anyhow, I hope you enjoy this and get a lot of use out of this. Thanks for watching my video.